Good afternoon and welcome to this online event with Professor Göran Roos and Jonas Lindholm. This is a continuation to an event we held last year when we were 6 months, I think, into COVID, and now it's 18 months into COVID. So it's going to be interesting to hear the present economy and the outlook. We're holding this as a meeting today, so which is quite good for everybody to become really interactive, and you can raise your hand and ask questions live rather than putting it in the chat if you prefer that. So let me introduce our moderator, Jonas Lindholm, and most of you probably know Jonas Lindholm. He has been a member of the Swedish-Australian Chamber of Commerce Board for a number of years, and also the former Trade Commissioner to Australia. He has supported over 400 Swedish companies to establish and grow their business here in Australia. Welcome, Jonas.
Thank you very much for that eminent presentation and introduction. Many familiar faces. It's great. Looking forward to a great evening. Firstly, I would like to respectfully acknowledge the traditional custodians of the lands which we are meeting. In my case, in Eastern Sydney, it's the Bidjigal and Gadigal people of the Eora Nation, and I pay my respect to the past, present, and future leaders. Dear Ambassador, President of SAC, ladies and gentlemen, I think we have a very interesting evening ahead of us. I urge every one of you to really take this opportunity. It's a really a unique opportunity to get answers to some really hard questions on what's ahead of us. I think last year we said what's beyond COVID, and here 12 months later we're gonna dip into that questions again. Without further ado, I would like to give some background on who Göran actually is. He's a specialist in the field of intellectual capital, an expert in innovation management and strategies. He works for governments around the world. He's an advisor and visiting professorships in Australia, UK, and Norway. He's a CSIRO affiliate, a fellow of the Australian Academy and Academy of Technology and Science and Engineering, ATSE, and the equivalent in Sweden, the Royal Swedish Academy of Engineering Services, IVA in Swedish. For me, foremost, a great friend and a role model. So without further ado, please, Göran, take us away.
Thank you very much, Jonas. So, Your Excellency, ladies and gentlemen, it's a pleasure to be back again. And this time it might be more easy to have a dialogue since we have it as a meeting format rather than a presentation format. And what I will do is I will just briefly touch upon the things that have changed since the last presentation rather than repeating that presentation. So without further ado, I will aim to share my screen and just cover some of the topics, and with a bit of luck you can all see it now. So it is an update a number of months later. So what are the major changes? I think the biggest change relates to the forecast around the economics, the macroeconomic future, where we're now seeing some interesting changes. All of you who have invested on the primarily European and US stock exchanges over the last 18 months are to be congratulated. That has been a really positive experience for most people, and a lot of wealth has been created, driven by a number of things that are now disappearing. So that is the bad component. So what we are seeing is that we are, when you discuss with the central banks and with a lot of the people in the who are forecasting the future in the financial industry, basically they have a reasonably pessimistic view on the future, moving into a kind of basically a stabilization of relatively low growth once we come past a hump of rapid growth, which is being hampered by lack of labor with the right skill and lack of supply chain functionality, which I'll come back to. But after that, we're seeing really stabilizing low growth and increasing inflation. And that is not a really nice outlook. And it's driven, of course, by the slowly stopping of free money. So they're turning off the taps. the problem around reducing profitability for companies as a consequence of what we see here, and then that the economic recovery in some of the bigger companies are slowing down. And we can see that in the latest numbers over the last couple of weeks from the US and from China. And we also have to pay back a lot of debt in a number of countries. So all of this is pointing to a relatively bleak microeconomic view moving forward. And I'm sure you can all look up Financial Review and see all kinds of interesting comments around this. The supply chain problem, which I'm sure a number of your companies are facing, is here to stay at least for another year. And that supply chain issue relates to everything from the microelectronic components, semiconductors, and so on, to specific raw materials that are problematic. There are side effects. When you start up, for example, big refineries again after being down, there are backlogs of other type of side products that comes from these refineries, paraffin oil and whatever it may be, that has provided problem for manufacturing completely different areas. For example, matches use paraffin oil, and this was a real problem for Swedish Match to get hold of this during some of this area, and the startup means there are backlog orders. That also means that if you are a supplier of some of these in-demand components, you will supply based on your priority list of your customers. And it means that if you are a small, relatively insignificant customer, you may not get what you need because more important customers will be prioritized. This, I think, is something that has a high implication for a number of companies in Australia, which maybe are not the largest customers of these international providers of scarce raw material over the coming 12 months. So I think that may have some implications for those companies. We also have to put next to this the transition that are happening in some industries. A classic example of that, of course, is the automotive industry migrating from its internal combustion engine-based activities to electric and/or hydrogen propulsion systems. That has implications for the supply chain. On a rough statement, the supply chain is going to shrink by about 3/4. Because you only need about 25% of the number of components in an electric vehicle than you need in an industrial combustion vehicle. And that means there will be huge transitions in those supply chains. And if you take a country like Sweden, where there is, give or take, 90,000 employees in the supply chain of the automotive industry, this will have some implications for a number of companies in those supply chains. Are they able to transition or are they not? And if they transition, what will they transition into? So there are some challenging we're facing here, and I will emphasize again, they relate primarily to, in the short term, to raw materials, but in the long term, they relate to the lack of competent individuals for the new demands we need. There is a competence deficiency in most of the OECD world. And that, of course, means that it is difficult to keep employees on board if you have a restructuring activities. And by the way, those employees do not hold the right capability. And that means that there are some interesting implications for the labor force, for unemployment, for training, and for transition. Work from home is here to stay, at least in part, and at least for some sectors. It seems like you're migrating to a situation where about 3 days out of 5 are expected to be in the office and 2 days are about to be at home. That is being negotiated on an individual basis by companies and employees, but we seem to see a trend to that, at least in the white-collar sectors. And a lot of people who have had previously quite long commutes, primarily in the bigger cities in Europe and the US, have discovered that actually not commuting can be rather nice, specifically if you have a reasonable place to work from home. Now, not everybody's got that. So people who sit in a pretty cramped, unsuitable one-bedroom flat somewhere would rather be happy to be at work. So there are some interesting tensions in this area, but we do see this. And this, of course, has major implications for office buildings, the need of space, the type of space that you need. If you look at London, for example, it is now almost impossible to get rent to, in other words, get people who rent, in other words, companies that are willing to rent in buildings that are not modernized to the level that it can deal with project work and other open type office activities. They are impossible to get revenue streams from. And that has a huge implication for the property value of some of these properties in cities, where we can see some drop in those properties that need major refurbishment and updating to be in demand, and reasonable increase in property value for those that are suitable, although they will have an asset utilization issue if you have, you know, three days in, 2 days out. So what do you do with the space and how do you manage that? So there are some interesting challenges for that sector. The one thing I'll say a little time on here is this move to green. You know, you have all followed the Glasgow activity and so on, but that's not really where it happens. The move to green at the moment, at least in the OECD world and at least in Europe, takes place in the boardrooms of companies. It does actually not take place in the political sphere. There is a lot of talk in the political sphere, and I could hear quote Greta Thunberg with her blah blah blah, which is actually not that wrong for some of this, but companies are doing this, and they do it because they know, are they not in this transition, they will be out, and they will be out in many dimensions. They will be out from their customers, they will be out from the consumers, and they will be exempt from accessing some of the funds that will be made available from the public and supranational domain for transitions. And there is a huge planning activities and working activities in companies around this, and it's happening basically all over the world. And here I think there is a challenge that may come to some of the companies that operate in Australia without keeping a finger on the pulse what happens in the rest of the world when you in this migration process to green. Now there is also in the political sphere and the public debate, there is a lack of bringing forth some of the complexities that this transition entails. So the first thing that happens that we are migrating to from a dependency of petroleum to a dependency of metals. That's critical. And that, of course, is very good for Australia potentially, but it also has some geopolitical activities. And part of that is that we actually do not have enough of some of these metals. This delightfully simple picture shows to you some of the critical metals that we need to get access to. And what you have is on the left side of the respective metals, you have a little black line that tells you how much we're able to produce today. Then you have a red space with a couple of dots. And the dots are basically a demand for, you know, low carbon technology and demand for all different types of users that we foresee given this transition we're into. And as you can see, for most, but not all, of these metals, the demand substantially outranks the production capacity we have. That means we are going to run out of some of these things critically. And to give you a number, with present technology, and I make that caveat because it's the technology that depends on magnets in electric engines, and not all technologies do that. But in the present technologies that we use, you need for producing an electric vehicle, and I've said this before, and it's worth saying, you need about 100 grams of dysprosium, a rare earth metals, to produce these magnets that are used in vehicles. That means with our present production capacity, which is around 1,800 tons, of which 90% comes from China, we can produce 18 million vehicles of electric nature per year. There are sold in the world 82 to 84 million vehicles every year, which means we can only transition 1/4 of the combustion engine vehicles to electric. It is impossible to go 100% electric, purely from a raw material standpoint. And this is supported by the fact that we at the moment have no technology that is able to recycle that dysprosium out of the magnet at any form of scale. So, and this is just one example, because obviously magnets are used in wind generators and a few other things as well. So there are there are a number of limitations of how we are able to move into this new world, which needs to be taken into account. And that is why there is a debate going on whether the electric transition on mobility is a temporary one before we can go into things like hydrogen, or whether it's a permanent one. So the first challenge is access to minerals. And I talked about the inability to recycle some of these things. The second is this discussion about the circular economy, which as an ideal concept is brilliant, but it just does break a number of laws of nature, primarily the second law of thermodynamics. So you cannot have 100% circular economy. It is impossible. So apart from the fact that the laws of nature makes it impossible, then some manufacturing processes make it impossible because the quality of the material degrades as you recycle it frequently. And there is also other type of losses in this cycle. And in addition to that, there are some raw materials that we just cannot recycle. You know, you cannot bring cement back to its component part. It just doesn't work in this, or concrete. So there are a number of challenges around what we do. So, and also that if you migrate from a material that is wearing out quickly, like for example, steel, iron that rusts in some form of carrying capacity, to something that doesn't rust, in other words, lasts longer, like stainless steel, then the energy and the complexity of recycling it goes up. So there is no win in this, going for something that lasts longer. There is no win in that process. So the argument saying we should move to things that last longer actually is not necessarily the right argument in all situations. So there, and also there is a flawed view that nature is incredibly efficient in this, and the answer is no, it's not. Nature is highly inefficient in how it operates. You know, any of you went to school and remember the pyramid about primary producers and so on. There's usually a factor of 10 on any level. So you need 10 of this to get 1 kilo of the next one, 10 kilo of that to get the next one, all the way up. And there's a huge number of waste energy in that process. So I covered that. When we go to this new world, take an electric car, for example, to move a given distance in an electric vehicle requires about a quarter of the energy that you need to move the same distance with a petroleum-based car. So that sounds good, but it requires an enormous amount more of electricity. So the migration to green drives up the electricity need, and that is frequently underestimated. And I have a hopeless slide here, but basically it boils down to what is going up in northern Sweden with some of you guys there, SSAB, LKAB, moving through to this hybrid project. And the amount of energy in addition to your present use that you require that. So just LKAB and SSAB moving into hydrogen-based steel production, which of course reduces around about 3% of Sweden's CO2 emissions, will use 35% of Sweden's present electricity generation capacity. 35%, right? And then we have people who argue that this should be produced by using wind generators. And then I will give you a few numbers here. So in order to generate this amount of energy via wind generator, looking at the biggest you can buy commercially now, which is 7 megawatt energy generator. That's one of the ones with about 154 diameter propellers. It's a pretty big one. Its utility level is round about 28%. It's about how many times it can actually rotate out of the time it's available, because it either blows too little or too much, and that scenario. And if you work that out, you require surface area for this is about 500 square kilometers on land, about as close as you can get them, and about 1,375 square meters for offshore. And using the latest pricing from the Wind Generation Association, this will cost you around $68 billion to build. And that is excluding the connection issue, excluding the maintenance, and excluding the recycling. The operating life of this is, depending on the study, between 10 and 15 years. That means that in 45 years, you will have to spend 144 billion. You can compare that with the present cost of a nuclear reactor using Hinkley C in the UK as the latest cost with all the increases of about 49 billion. So you're paying about 3 times as much for something that, by the way, is going to use raw materials that we will not have when these things are in competition. So there are a number of these challenges we're looking at, where it is critical that we understand what this means. Then we have another very rarely discussed issue, and that is when you build these things, you know, there is a whole host of energy required, from digging up the raw material, creating the metals, putting them together, moving it out, and creating this energy source, whatever it may be. And then they have an operating time under which they generate energy, and then you have to use energy to take them down and move them up. And if you take the energy that it generates during its lifetime and divide it by the energy used to create this energy source, you get a number which is normally Looser's energy return on energy investment. And in a civilization of our nature, we need to have a very large return, because we need to provide energy to all those things that do not provide energy to itself, be that education or hospitals or whatever that may be. And round about now, well, 20 years ago, we needed about a level of 7 in return. Now we need about 12, because civilization goes up all the time. And you know, the more it goes up, the more is needed to maintain what we already have, in addition to what we are going to build. And you can see that if you look at these renewable energy sources, that most of them require some form of buffer storage, be that pumped hydro or batteries. You can see that basically none of them generate sufficient energy return on energy investment to maintain the level of civilization we presently have, with one exception of pure renewable, and that is hydroelectric, and one exception with one that is non-CO2 emitting, which is nuclear. So that means that in a portfolio of energy generation, if you're going to leave behind gas, coal, you will have to contain in that a substantial combination of either and hydro and nuclear. And that is an interesting discussion which is frequently forgotten. And we can see that in some of the challenges for countries have too rapidly moved into some of these renewable energies, which are not sustaining them in doing these activities. So that was my happy view of the future. So what it means is that yes, we are going to see economic growth for a period. It's going to be hampered by short term by lack of raw materials and lack of competent labor. The transition is going to be substantially many of these sectors that we're looking at. But macroeconomically, there's going to be a challenging environment over the coming period of up to 10 years, until maybe some countries have repaid the debt substantially. The biggest transition is the transition to green, and that is a fundamental necessity. There is a disconnect between what we know scientifically and what we know business-wise in terms of what the requirements are and what the political debate and decisions are about. Thank you. I thereby open up for questions and comments.
Thank you very much, Göran. Woo-ha. I think most of us need some time to contemplate all extremely interesting information. You might understand why I try to get Göran for hours and not just 30 minutes, because it's so much information in here. As I said before, please either raise your hand or put in the chat your questions, and me and Camilla will try to steer the questions. I will kick off with a question, Göran. We spoke earlier this week, and you touched upon this a little on the nation. I mean, the oil nations have been very strong, OPEC and the likes, and now you're saying that metal and minerals, especially rare earth ones, can you touch upon a little on what we discussed earlier this week around how that will sort of govern the new world, and what impact that potentially might have for Sweden and Australia?
Yes, here is one slide I prepared earlier. So I'm going to show you 2 slides. The first one is that the dependency a number of countries have on the petroleum economy. So if you look at the share of GDP of a couple of countries here, you can see the total dependency. And it's very interesting to look at where these countries are. And what I would like to draw your attention to is country number 1, 2, 3, 4, 5 in the list, which is Russia. So the Russian economy is totally dependent on petroleum in its different forms, which is why it's not until round about this year that they have ever looked at any form of transition plan. They haven't had one. And I mean, all the technology plans for Russia has been about increasing efficiency around petroleum rather than anything else. So you can ask yourself, if 10% of your economy, your GDP, is dependent on the export of one group of products, how likely are you to accept that the customers of this product reduces their dependency on your product and thereby hurt your economy? And you can see that in some of the interesting activities that is going on from Russia towards other countries. So that's the first one. So there are some countries that have a specific interest in reducing the transition for purely economic views on their own economy. Then you have the countries that then become the winners in this transition. And it's very clear that there is one overarching winner, and that is China. So China controls or dominates most of the rare earth metal production. And if you look at the reserves, you can then see that, yes, we talk about Australia's enormous reserves, but they basically dwarf compared to what you find in China and the overarching under geological areas into Vietnam. So you can then also understand why the United States is financing exploration activities in Australia for rare earths, given that they need to reduce their dependency on China. So it's very clear that China's ascent is not only driven by its economic growth and strength, but it's also by its domination of some of the critical raw materials for the future world. And China has known this for quite a long time, which is why you have seen their activities around the world has been focused on taking control of a number of these raw material sources in other countries, be that South America or be that Africa. And you can expect, in my opinion, China into the future to really use their domination in the critical raw materials for these new transition industries to impose their opinions and wills on other countries. If you haven't read it, I would recommend that you read this little book written in 1999 by two colonels in the People's Liberation Army called Unrestricted Warfare, which basically outlined exactly what China has done since then in terms of using all kinds of interesting tools which are not open warfare. And please remember that historically, the Eastern approach to warfare is to win without combat, whereas the Western approach to warfare is to win through combat. So that's a mental activity, and you can see how the outline in this very clearly. The arbitrary construction, dismantling of trade barriers, use of hastily written trade sanction, introduction of embargoes to critical technology, have a number of special law sections, most favored nation treatments. All of these are outlined together with many other things, environmental warfare and so on. And you can go into this book and you can actually recognize very clearly based on some actions that China has taken over the last 10-year period. So that is worth a look for those who are interested in understanding, let's call it the philosophical articulation of China's approach to influencing its surrounding world. That is my answer to your question.
Thank you very much, Göran. I see Magnus has a question, but I will let our ambassador, because I think he had a question pretty much relating to China. So Henrik, please come in with your question.
Thank you very much, Jonas, and great to see you again, Göran. Great to hear you do another very intriguing presentation. And during these COVID times, of course, we haven't even met yet. I mean, that's unbelievable. But the good thing is we meet this way anyway. But I'm sure we'll meet in 2022. Yes, I had. When you started out, I did formulate a question to myself here on China, and very interestingly, you reached the topic of China now at the last question, and I wanted to ask you, because you talked a lot about supply chains, and if we talk about our region here, Asia Pacific or Indo-Pacific, China. I mean, it has become 2 decades ago, we talked about it was the factory of the world. You know, that's where everything was going to end up. Now we see a number of challenges. We have the political risk, we have the geopolitical tensions, and who knows how this will play out. But we also have other things, rising costs, energy insecurity, and even China wants to do some sort of decoupling. So how do you see a Swedish corporate relate to China? Well, there is the market, but if we talk first about the supply chains and having China as a base, as a part of your network, how will companies address this going forward?
It's a very good question, Ambassador. And again, good to see you too, at least remotely. That's a highly complex set of issues that you raised there. So the first thing is that one has to understand the complexity of supply chains in the modern structure. So a traditional multinationals down to the level 3 of their supply chain is in the multi-thousands of suppliers normally. And most large multinational will not really have a good idea of what happens further down into their supply chain. And one of the things that COVID has forced them to do is to get a better grip on what the supply chain looks several layers down, which previously was not really needed. And also historically, the focus on supply chain has been very much on efficiency. And of course, what has raised its head over the pandemic has been the need to focus on resilience. So you now see a need to balance this. Now, so that is a general issue where you're looking at what is the right thing. And part of the resilience is looking at risks, of course. China is an interesting place. So let me park that for a moment. China traditionally, where a Chinese company competed with a Western company, normally based on price, low price for a somewhat inferior product in some dimension or other. What has happened over time is that China has overtaken the West in several activities on R&D spend, primarily in the volume of money spent on R&D in some of these Chinas, not necessarily in percentages, but in money. And that means they have accelerated their product capabilities dramatically. So they are in the not too distant future, if not already there, depending on the sector, they're going to be able to offer equally or more sophisticated product than at a somewhat cheaper price, not as cheaper as it was than it is. I mean, if you want to have an intro, and I'm sure our friend Håkan here could comment on this if he wanted to, but number of years ago, you had Ericsson as a very strong supplier in the telecommunication side, and you had Huawei, which was people were, looking at shoulders, rubbing their shoulders a bit, saying, yeah, well, they're cheaper, they're not good. They send 100 engineers if they need to fix something because they can afford it. Now it's very clear that they are a really good, forget the political aspect, but they are a good technology-based supplier, and they are competing on equal performance, or in some areas better performance, not in all areas, than our traditional telecommunication suppliers. So that is a trend you will see in more sectors. So you will find that in some of these, there will be a challenge for China to be able to export. And the way they respond to that is that they have the equivalent continuation of the Belt and Road Initiative, where they force you to adopt Chinese standards in order to be a participant. So they use standards as a basis for trade, and they will also be referred to in the book I referred to earlier. So how do you deal with China? It is still going to be a good sub-supplier source for some sectors, but don't expect that you're going to be left alone competitiveness in all sectors from Chinese companies. So there is a big challenge of balancing the sub-supplier activities and the leakage of IP that automatically happens in China with the necessity to have sub-suppliers in your chain when you do your R&D to develop your competitiveness. So in a sense, you can see that you have a bifurcation from company choices. Either you have to dramatically increase your R&D innovativeness and performance, including your supply chain, to be able to compete on a broad product range with your Chinese competitor as they emerge. Or you have to find a very narrow global niche area where you can become specialized really, really good, which is too small for the Chinese company to compete with, given that it has a more volume activity. It's a very complex discussion. I'm not sure I answered all of your questions, but it requires a lot of reflection around what you should have done in China, because you will have some things done in China, what you should not do in China, and what your long-term strategy is for competitiveness and R&D on your own business. Thank you.
Was that good enough for you, Henrik, or do you want any additional?
Very much. Thank you very much, Göran.
Thank you. Magnus Nydén, please, if you can come in with your question.
Thank you, Göran. Good to see you again. You, unlike myself, seems to have been keeping fit during COVID. That's good to see.
You can't see all of me, so that's wrong.
I miss you from the Adelaide time, Göran. I hope to be able to catch up with you soon. Look, I have so many questions. I have one question that I decided to merge into another question. It is sort of where the new economy that we are forming right now merges with the cost development of renewable energy. Yeah. The new economy, there is a hypothesis there that I think is well underpinned, is that it consists of three major pillars. You need stuff to power the economy, which is energy. You need stuff to move the economy, which is transport and logistics. And then you need things to manage the economy, which is the internet. And these three things have always in the history of time been the reason why we changed the way we live our lives on this earth, i.e. the economy. So now we have renewable energy, we have renewable transport, and now we have the internet to manage it all. And now these digital technologies are rolling out, which means that the efficiency by which this economy potentially can develop, i.e. the productivity, some economists seem to say that it has 300% the current productivity is 19 to 20%. We know that. And the new economy has potential to be up to 60% because of the much fewer losses in the whole value chain of transforming the sunlight into electricity and power and movement than coal has, and the fact that we leave, see the atmosphere as a dump and all of those things. But it's thermodynamics, essentially. It's such an inefficient way to drive the economy, which means that it's inefficient. Now, a lot of that seems to rely on the fact that the renewable energy costs are very, very, very low. And it's a highly, highly efficient way of producing the electricity for power or heat or whatever you like. Your slide there seems to point to a different story around that, though. The other story is that, no, these are continuously, exponentially changing cost structures to them because there is no bill for the sunlight, etc., and the cost of producing them keep on going down. Same for the wind and PV. We have certainly seen those cost curves. Almost all the slides I have seen point to a different graph than you provided in terms of, I'm saying efficiency here, but I'm not saying the right word because you have an ERI difference. Can you explain the fundamentally different ways of thinking there, please?
It's a matter of where you put your frame on the object you observe. So if you put your frame around the end solar cell product that you may put on your roof, then your argument is absolutely correct. The cost of that is reducing at the moment, primarily because of economies of scale. The technology is improving, so we can capture a broader bandwidth of what we need to convert it to energy. So all of that is absolutely right. What that frame is not taking into account is the raw material cost to get there. In other words, that we use some raw material, maybe tellurium or what it may be in this scenario, and that not all of them, but for some of them, we are starting to see deficiencies in this raw material, which will drive up cost in this supply chain, which has nothing to do with the economies of scale. It just has to do with the scarcity activity on the supply chain. And on some of these material, we have not needed them for a very long time, and many of them have been side streamed, like my neopremium and dysprosium activities. They've been side streamed out of other production activities, so they've been stocked, and nobody really used them for anything very much. And suddenly we see a really large demand, which is larger than the annual production. So we've been eating down the stockpiles of these materials. And that has not impacted the price until you're now hitting the deficiency button, saying we can't get them much. And if you look at the prices of magnets on the world market, you can see how they are suddenly accelerating quite highly because they can't produce enough based on the raw material. That's number one. The second thing is that the yield factor and you know that, Magnus, the yield factor for new ore activities, the yield is much lower. So the energy needed to extract these is increasing dramatically for any new finding that you get. And that means that the energy consumption on that end of the chain is going up dramatically, but that is not visible when you put your frame solely around the end product. So it's only when you take in the whole issue of energy use in this area, all the way up to it. And don't forget how much of that frame is taking in the energy needed to recycle these activities. You know, they're taking down a concrete steel reinforced 350-ton thing that goes under a wind generator. And what energy do you need to do that, and how do you do that? So the framing is very important around, you know, what are you actually measuring in this? Secondly, they frequently assume that the energy you get out of this is instantaneously usable. They don't take into account there is a buffer needed to feed it into the energy system. And of course, if that buffer is a kind of Tesla Powerwall, then it's a battery with the same problem as all the other battery materials. But if it's pumped hydro, it's still very good, but it still has a low efficiency. So you then lose a bit in pumped hydro because you get not very high percentages back of what you take down, you know, the way the Victoria uses Tasmania as a pumped hydro battery traditionally. So again, it's a function. So I think both the statements are right. It's just a matter of the framing of what you're talking about. And it's very easy to get stuck on just looking at the widget and how that has improved and been much, much better, rather than looking at what we have to do when we look at this from a global point of view, taking the whole chain. And secondly, most of these things are looked at it from a national level. And if these things end up somewhere else in the world, we have a problem. It's like the classical issue of, you know, Sweden has this problem where, you know, we run out of energy. It's not a problem. We import it from Poland. We will import cement from Poland. What we don't take into account is that cement will be produced using coal-fired power stations. So in other words, we export a CO2 problem to another country by not dealing with it domestically. And again, it's a framing problem. So it all boils down to where you put your frame, Magnus, on that one.
Thank you, Göran.
I urge you to keep coming on with questions. I had one sent in from Kieran. Kieran Sneeman, the Director of Government Affairs at AstraZeneca, Göran. He wondered, as we move to the next stage of the pandemic, have our attempts to battling a virus-driven recession been worse than the disease itself?
That is an emotionally very difficult question. You can actually make the argument both ways. And it all boils down to the price you assign to human life. And by the way, that is a price that exists in all kinds of interesting government departments. You know, the Department of Infrastructure will build roads, but in order to make the payback, they have to have a value on a life, or a human life. So not something they want to talk about, but it's something that you have. So it boils down to what the value is. So if you look at how many people have died, and you then look at the total global cost, and you compare, you know, a kind of a flat GDP curve, and then we have assigned an unbelievable value to human life. The latest number I saw, and I don't take responsibility for this because I haven't verified it, is around about $8 million for a human life, right? So because actually, if you think about it, there are a high number of absolute deaths, but as a percentage, it's relatively low. And you know, I'm going to be a bit careful here because I know this is being recorded, but you can look at it this way. A very large number of the people who died were of a very high age. And some of those deaths were unnecessary, primarily because of the way the aged care institutions were operated. So they were operated very, very badly, and therefore there was an unnecessary amount of deaths in this area. Some of those people that died in COVID would likely have died relatively soon from normal flu, because they were frail, they had a number of other issues, and it would happen. So what we will see likely is that the over death, at the over mortality level, so the number of people who died above and beyond normal over the last 2 years, will result in an under mortality for another year or so, where we will have people dying fewer than we would have estimated because they just died an odd year earlier. So what you have to look at here is not the total number of deaths, but probably about the over mortality level. And then that number reduces. And if you then take the spending that we have incurred, both directly and by stopping the economy, thereby indirectly, then you could make the argument, I'm not saying I'm doing, but you could make the argument that the cure may have been worse than the disease from an economic standpoint, right? And that is not the only standpoint you should have. There is a humanity standpoint, humanitarian, there is all kinds of others. It has also had the side effect that it's driven a completely new way of doing research and development of new pharmaceuticals, which will dramatically change the pharmaceutical industry in terms of speed for developing new solutions. They're using artificial intelligence or different versions and so on. So that has been side effects. I mean, all challenges of this nature delivers positive outcomes. But what I'm saying, you can argue both ways. You can argue that from an overarching humanitarian and overarching view, a human life is basically infinitely valuable. Therefore, whatever cost we have incurred has been worth it to reduce the number of deaths that could have happened. That's one argument. The other argument to say that economically, compared to the mortality rate we have, the value we've assigned to a life is probably in the vicinity of 20 times higher than we assigned a value to life in any other calculation we make on a public domain for decisions or spending money.
Do you want to reflect on I mean, there's quite a difference between the Swedish approach and the Australian approach on battling COVID as well, on far end of the spectrum. Is there any to add on that, on the social and economical impact that you especially foresee now getting out of this?
I don't think either of the approaches were optimal, if I put it in those terms. I think the Swedish approach has shown the weakness of the Swedish constitution, where you have a fairly well delineated power for government compared to the departments, which is why the Swedish Defense Department is like 150 people or so compared to other people. There's a completely different constitutional structure. But it is basically inherently, if you go back to Axel Oxenstierna, is inherently based on the fact that you had highly competent leaders of the independent departments and authorities in Sweden with the decision power to act on their own instigation. So what we had is a constitution that provided weaknesses and a lack of the people who were able to counter that weakness in Sweden, in my judgment, which is why we ended up not necessarily doing optimally out of this scenario. And I think the commission that is reviewing it, I haven't read it yet, will come up with some similar weaknesses identified. In a global pandemic, closing your borders do not work unless you close it 100% tight, which you cannot do. There will be air crews coming in, there will be vessels coming in, you need to have whatever you need in this area. So it is not a matter if you're going to get some things spreading in the country, it's a matter of when, right? And the one critique one could possibly levy on the Australian and also the New Zealand government initially was that once they closed the borders, they relaxed and thought they were fine. That time should have been used to inoculate the population initially for the inevitable day when the pandemic would sneak through the barriers. So I think there is the critique you can have been directed there was that there was an initial belief that border closing was enough, right? Which it isn't. It is just it will come through. It's just a matter of when, right? So I think there will be interesting to see what the reviews are exposed in Australia as well. I think that is what I want to say.
Thank you.
Henrik,
Thank you very much.
having your hand up, Henrik?
Please, Henrik, go, and then we have Sönike after that.
No, I'll go after. I'll wait to my turn. I've already asked the question.
Okay, then we have a question from Andrew at Sönike. Sönike, how do you think the smartest companies will build supply chain resilience going forward?
I don't think it's a matter of being smart or not. I just think it's a matter of very hard work. The first thing you have to do is to map out what you actually have in your supply chain. Then you have to find what of those components are critical, truly critical to you. Then you have to figure out, for these critical components, do I have sufficient control, and I use that in the broadest definition possible, around this supplier? In other words, do I have the supplier in close proximity? Do I have alternative suppliers of them? Is this a supplier who supply alternative competitors to me? How can I ensure that one supplier is not going to cause a risk to my supply chain, either in their own right or because they are located in a given location? And we did see, for example, France blocking some transitions of material that were in supply chains to Swedish companies because they decided they needed them themselves. So that is obviously a country risk that was not perceived to exist until we saw it in operation. So there is and then you have to look at this balance between efficiency and resilience, because resilience will cost money in terms of reduced efficiency of what you do. So it's a really, and for many companies, it's the first time really they've been forced to dig down into the supply chain to several levels below where they usually do this. So it's a major piece of work, but it is about identifying where those critical suppliers sits in the system. And they may, surprising it up on a level 5 or 6. Because there sits one guy there who supplies everybody in the world with one thing or another. And the question is, are you aware of that? And are you aware of what a damage to that supplier would be? And we've seen some of these things. We've seen them with fires, we've seen them with earthquakes, we've seen them with all kinds of other things across the world in some key areas. But it's about having a better understanding of them and be willing to incur some cost to offset that risk that they pose one way or another. One of the things we actually see is a dramatic increase in OEMs, so the end of the supply chain, requiring capability development and investment, which sometimes they co-invest in, around critical suppliers and alternative suppliers to develop skills in 3D printing in some areas in order to be able to have an offset opportunity if some of the other suppliers disappear. So they have the ability to critically supply at a lower volume, at a lower rate, but still keeping some things going in some of the supply chains.
Thank you very much. Magnus, please, your next question.
Okay, thank you. It's also a supply chain question, Göran, and it's the semiconductor one, where it seems like the last 6 months have been people by people, I mean governments, are running around with their head under their arm, almost figuring out what to do now. It would seem to be an effect of two things. One is a pure sort of raw supply chains question, but the other one is, of course, much more strategic. And you can think about Taiwan and China, for instance, and a lot of the fabs sit in. There's a big fab in Taiwan, and these are multi-billion type of machineries. And you just, even a country like Australia just probably will never build one of these things because they're way too expensive. But there are definitely thoughts about bespoke defense type semiconductor things, because they fundamentally underpin everything we do in microelectronics, which sits in everything we do today. So what's your view here? How should a country like Australia think about the supply chain of semiconductors into the future, particularly with a focus on bespoke, and let's be even pointier, defense type manufacturing of those type of things we need for our defense capabilities?
Yeah, the supply chain of critical components in the semiconductor domain has been basically most of the problems we saw are driven by two things and not by COVID. One thing is the dramatic increase in demand, primarily from electromobility, so electric vehicles and the huge demand that they put on it. The second one is we had fires and we had floods and we have a few other things that just natural catastrophe that simultaneously knocked out huge production facilities in Japan and in the US and so on. US is acting on this. They are in discussion with their own producers and with the big boys in Taiwan and so on to dramatically increase the number of facilities to produce this type of equipment that exists in the US. And we all know that building one of these things is not a cheap affair. and you need to have one of the leading players, TMC or one of those people involved. Because, I mean, this is one of the weaknesses around the European EU strategy for building their own facilities to make these components, is that they have missed the point of the access to the really advanced technologies needed to produce this. So they are generation-wise quite behind in the plan for the facility they intend to finance to build in Germany. And that means you need to have one of these people on board if you're going to build something. So what do you do in Australia? You cannot afford to build one of these. Yeah? Especially not since you're going to spend a lot of money doing things that relates to submarine and defense sphere, which will cost you much more than you think over a long period of time. Even if you now think you saved 90 billions, but you haven't started to spend them yet. the on the next generation. So I think that as Australia, you need to really tighten. I mean, as part of the now stronger defense ties with the US and UK, you need to tighten also the relevant supply chains that are necessary with the US for these type of defense components. I don't see any other alternative for Australia to secure access to these components from a geopolitical risk perspective.
Thank you very much, Göran.
Thank you.
Good question again. Henrik, you will have our last question. So please go ahead with your second question.
Thank you, Jonas, for giving me the floor once again. And I felt we couldn't end this interesting discussion without coming back to Göran, to your slide about investments and the expected returns on investment on that slide regarding renewable energy or other energy sources. And it was a long time I was involved in any sort of investment analysis, so that was very quick for me. But as I understood it, the expected rate of return or required rate of return is going up from 7 to 12. Yes. And therefore, some of these new sources of energy won't live up to those expectations. It felt a little bit pessimistic, and that's where I come from with my question. So, I mean, the traditional sources of energy are now in many ways becoming sort of toxic or stranded assets, they might even be. And financial institutions are moving away, and politically, of course, we're going in the other direction. At the same time, costs are coming down when it comes to the new energy sources. So just that slide, will it change? Will it look different in 2 years' time? Now it felt a little bit something from the past.
No, yes, of course it will look different in 2 years' time. I mean, the only thing you can say when you're looking into the future is you're going to be wrong. So that we can agree on completely. The question is, how wrong will you be? Let me back off a minute and take wind energy as an example, because there's nothing wrong with your reasoning, Henrik. But so we see in climate change. Climate change has two effects, of which people tend to speak mostly about one of them. And that has to do, when the wind blows, it blows stronger, okay? So we have more brutal weather. And that means that wind generators on that side will have to stop working for, periods, and those periods are getting longer. But the other flip side, we actually get something known as global stilling. So there are longer periods over a year when there is no wind at all. And we've seen that. So if you add these two things up, over the last, I think it's the last 10 years, the utilization rate of wind generators in the North Sea, based on UK data, has reduced by 15%. In other words, there is fewer and fewer days in a year where these wind generators actually can operate and generate the electricity we want. So you have a number of things. On the one hand, yes, short term, the cost of building a wind generator goes down. That's absolutely right. And secondly, you know, based on the demand of electricity, the need for electricity and the prices are likely to go up. That's from an investment point, a really good message. The other message is that the utilization ratios of wind generators are decreasing. And so the question is, what is the relative balance between these two directions? So it is not so that the direction is solely positive. And to that comes all the other problems I pointed out about the increasing cost of raw materials and deficiency and so on. But let's forget those. But just looking at this, you have a somewhat positive side, but you also have a negative side. And the question is, what is the balance between these two things? So what I think is that there is a need for a more sophisticated projections of where things are going with this. And just to have a personal viewpoint on this, if you sit in a country where you have a surplus of hydroelectric, you will have a great future. That goes for countries like New Zealand and Norway as classical examples. Those countries who do not have hydroelectric but have nuclear will do fine. And we can see the movement in the European Union now, led by France, but supported by a number of countries around, and even the Green Party in Finland stated that nuclear energy is necessary for the green transitions. So you will see that, what you tend to forget intuitively is the huge volume of these items, wind propellers and solar cells, that you will need just to forget everything else, just to offset one nuclear reactor. It's the enormous volume of energy that we require that makes it practically impossible. And then it's a matter of those countries like Australia that has a surplus of things like solar, which is brilliant, and how you then package that energy and use it. Because you need to either sell the energy, which is hydrogen is a classic example of that, or you turn it into ammonia and then back again to make it easier. But Japan is leading the way of how to play these games. And then you can also use it to value add in your industry, you know, doing the steel issue and a number of other things. So Australia has a great advantage because it has access to a potential energy rating, you know, the big nuclear reactor in the sky, which we call the sun. And you have the same in Sahara and so on. But the complexity is higher than this due to the volumes, the raw materials, the costs, and the general change of how we do this. So from an investor point of view, and I had a meeting with an investment company yesterday, the view on wind is not as straightforward as the public press depicted because of the things I just mentioned. Was that an answer to your question, Henrik?
Definitely, no, definitely. Very interesting discussion. We need another hour for this.
Yeah.
Thank you, Göran.
Thank you.
Thank you, guys. We are a few minutes past our end time, so I think we have to conclude now. Göran, thank you very much. It's been amazing to listen to you as per usual. My head is spinning. Thank you very much, guys, also for brilliant questions. As Henrik said, we would have liked more hours here. I think we are going ahead into very exciting times. It's going to be transitional. Kina's going to have a major influence, and it's going to be a lot of trial and error, I expect. I think I conclude with saying that I really already now look forward to a new outlook late 2022, Göran. Before we end, I will leave over to Camilla to just update on the latest in the chamber. So thank you very much, Göran.
Before you do that, I will say what is classically said in some of the literature. Not only do I not back what I have said, I retain the right to change my opinions at any point in time. Thank you.
Thank you very much. Thank you very much, Göran. And thank you very much, Jonas, for very good moderation of this session. Let me just briefly mention the upcoming events. 16th of November, we are organizing an event together with the Swiss Chamber of Commerce here in Australia and ABB about unleashing technologies for sustainable future. And that's a virtual event. We have our Business Awards presentation, and that's taking place on the 25th of November. at 6 o'clock, and that's also a virtual event this year due to the restriction we're still struggling with to organize an in-person function at this month. And then we have some in-person events, which is fantastic to see. In Queensland, we have a Chin Chin event together with the European Chambers. And in Western Australia, there is a Christmas networking event we're organizing together with the Norwegian Chamber of Commerce. There will be also gatherings in recently opened up Melbourne and Sydney. So keep your eyes on our website and follow the upcoming events. For 2022, we're kicking off the year with a Nordic Open Golf Day on the 4th of March, together with the Nordic Chambers. And then we also have in March our new initiative, which is a Swedish Australian Innovation, Technology and Design Summit, 15th, 16th of March 22. Thank you very much and have a lovely evening.